All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Today, market pretty flat. And, really just hasn't done a whole lot throughout the course of the day. Pretty much kind of sitting about where it closed yesterday. And, even the distance from the high to the low here today is just not all that much. And I've had a couple comments made to me here today from different people about, well, what about this? And the market wasn't able to go up, and does that mean something? And one of the first things that I did, and it was someone who was in the office here with me, is I backed out to an hourly chart, and I said, what does this look like? Well, I can't even tell it did that, huh? Right? I mean, we're not talking about any kind of movement with any kind of relevance, with any kind of real change out there in the market today. And I know that for traders, that's always aggravating. I want something, where do I get in, blah, blah, blah. And there's some individual setups they could go after. But in terms of market change here today, there's zero. Zip, nada. It's the same market. It's the same metrics. It's the same internals. And it's most stocks are flat. Some of the outperformers from yesterday are lagging today, i.e. JP Morgan. Some of the laggards from recent days are outperforming today, i.e. FedEx, a Ford or a General Motors, Las Vegas Sands, right? We have some of those, Nike, for instance, and that's the environment that we're in, and it's not one that, taking out a magnifying glass and looking closer and closer and closer is going to change that. In fact, if we pull it out just a little bit, we understand how little change there really is, how little action there really is in the market right now, and how long that's been going on, right? We basically had this one move kind of on Friday. But since then, from the Tuesday prior till the Tuesday now, it's almost 2 weeks. You take out that one move, we're pretty much left with a market that's barely moved higher. Now, it's barely moved higher, but it's also not moved lower, right? So it's definitely an environment right now of a more of a holding pattern for investors, rather than any kind of, hey, let's sell or let's buy. We have seen news events come in that have pushed buyers in, have pushed prices higher on those news events. And, some of the expectation of those news events going forward is less. So the bears are going to argue, well, you know what, without any new catalyst, bulls can't go higher. But it's not like the bears really have any kind of control to sell things here. One thing that is a little bit different today, small caps. They're lagging here today. And, that's a little bit different than what we've seen. It's not a big enough lag to really change any of the metrics. But we are seeing that here with the small caps. But outside of that, it's pretty much the same thing. Now, we've talked about some of those things that would need to change for us to be talking about a change in market environment. One of them, the bullish percent index, right? And this is something, whether the market's up a little, down a little, it continues to go on higher. We have not seen any sort of breakdown here in the bullish percent index. The other thing that needs to change are the number of stocks trading above or below the 7-day moving average, right? So, here we have the number of stocks trading above the 7. Now, notice this number. This number last week, near the end of the week, was up around 450. It's now down at 283. There's a big change. It's not a big enough change to be a bearish signal or to create a bearish signal, but this is why we saw the erosion in the market vibe number yesterday. It's in a neutral position right now. Okay, it's in a neutral position right now, but in all, it suggests what? It suggests that a lot of stocks over the course of the last several days have broken below their 7-day moving averages. And we've seen quite a few of them do that. What hasn't happened is we haven't seen that kind of combination of stocks breaking below their 7s and breaking below their 20s. There's still over 80% of the S&P above their 20-day moving average. So it signals more consolidation than directional movement here overall. Okay. But I want to jump on. I want to show you something that you can use. If you're looking for things to change, or you're looking at saying, hey, you know what, is the nature of something changing? And it's a really simple indicator. And I'm going to bring it up. Let's just use FedEx for instance. And let's just get rid of all the other indicators here. And I haven't had a re-entry signal or a put entry signal here to jump on with FedEx. So, not jumping in there for the challenge yet. But I'm just going to throw on the accumulation distribution line. And this is a very simple indicator. And essentially what it does is it goes up when the volume goes up and goes up when the stock goes up, goes down when the stock goes down. But it brings into account whether the stock is closing near its highs or near its lows. And so a lot of times you can see a stock that's consolidating, but it continues to close near its highs. And that's generally a good sign the stock's going to continue to go up. Or you see a stock that continues to close near its lows, and that's a sign that, hey, the stock's going to continue to drop or may have some further drop in it. With FedEx, you can just see it's kind of moving right along with the stock overall. The stock has some days where it closes near its highs, closes near its lows. There's no real change going on there with that. But if we start to apply this to other things in the market, let's just take the S&P for example, right? The S&P. Here we are. The accumulation distribution line is actually strongly above what it was back here in September before the market really fell off. What's this mean? What's going on? What's happening? Well, it's telling us what? It is telling us that the market continues to close closer to its highs than its lows on a very consistent basis. Now, yesterday was a small exception. You can see the tick down, right? Even though yesterday the market went higher, you can see that the accumulation distribution line fell because the market, it ticked higher, but it was sold throughout the course of the day. So that's going to put pressure on the AD line here. But this is one of the natures that will need to change for the bears to have anything, to really sink their teeth into. They're going to need to see this change where the market can actually close near its lows on any kind of given day. Yesterday was the first day where we saw the markets come anywhere close to closing near its lows since right back here at the beginning of January, when the market closed pretty close to its low. But if you look at every other day, whether it's up or down in the market, right? Sometimes there's a gap down. Fine. But the market did not come even close to closing near its lows on any of these days. Yesterday was the first time that we saw the market come close to closing near its lows. The market starts to do this a little bit more. The bears are going to have a little bit, more and doing what the markets have typically done going into the close, and that is rally. But are there some individual stocks out there that, may be doing something different, right? Or what about a Caterpillar? Closing closer to its lows or highs? Today, big downgrade. UBS says sell it. It's margins, and we talked about the whole story this morning. But you'll notice the accumulation distribution line continues to rise. Caterpillar continues to close near its highs each and every day, or a lot closer to its highs than to its lows each and every day. Ford had some news on it here today, right? Here's Ford. Ford's not had that same element. Look at the accumulation distribution line. It's kind of this mediocre rise. Looks very different than the market itself, right? Why? Because Ford has had much more of a tendency to close near its lows on the day than near its highs. So yes, does it look like it wants to kind of break out? Yeah, it does. It very well could, but it's not exactly been something, closing near its highs. Now that has changed over the last kind of week and a half, right? That's changed a little bit in the short run. General Motors has been much more productive as far as closing near its highs on each and every day. There's a much healthier accumulation distribution line. And so if you're looking to play some sort of breakout in some of the autos, this is a much more interesting, type of name. But when we go to something that's, rising like a Boeing, right? The accumulation distribution line's hitting a new high. But you'll notice there's no real weakness here. Why? Because the stock continues to close near its highs each and every single day. Apple's been a little bit different. Apple, you'll notice the accumulation distribution line is not hitting new highs. In fact, the accumulation distribution has been very flat here of late. This is one that has not been consistently closing near its highs, despite the market itself consistently closing near its highs. And it's one of the reasons why it's on my radar for a short trade. Now, I haven't had any signal confirming, hey, the short trade's on, but this is kind of one of those precursors that we generally see before there is some sort of short trade coming in. Take a look at Micron. Micron's gone higher the last little bit, but you'll notice the accumulation distribution line has actually been falling. Micron has been closing closer to its lows than to its highs over about the last week and a half. So we kind of see this rounding action coming into Micron and creating a little bit of shift there. I want to short Pepsi. I always want to short Pepsi, right? Even when the market, was near its highs, I want to short Pepsi, right? I think it's incredibly overvalued here, right? But take a look. It's still closing near its highs almost any given day. Yesterday was a little bit different, but overall there's no real breakdown here. There's just zero breakdown. And when we look across the market, yes, you can find individual names where, there's this kind of rounding action or the Apple type action on them. But the majority are kind of like Pepsi, where, they just continue to close near the highs. And that just says, hey, bears beware. Bears beware. You don't want to get stuck into too much. Yeah, you know what? A little trade here and there. And yes, you can get a little shot here and there. But overall, it is still a bull's world. And no real sign of that changing. If you're in something, you're worried about what it's going to do and how it's performing, something like I was asked about AT&T here today, right? It's up near its upper Bollinger Band. And obviously AT&T could go any direction going forward, right? New variables can come in. But take a look at this big change in AT&T of late in the accumulation distribution. The accumulation distribution on AT&T had been down for a long, long time, where the stock was more apt to close near its lows than near its highs. Since the beginning of the year, AT&T has been much more prone to closing near its highs than near its lows. And that continues to march on, and that continues to be a major dynamic change when it comes to AT&T. Today I've priced out the banks a few times, possibly a short on the banks, some of the comments from JP Morgan and whatnot. But you can see the accumulation distribution line, it has a little bit of lag to it, right? Definitely doesn't look like AT&T. Bank of America here has had a much stronger accumulation distribution line. But the XLF, overall the accumulation distribution line's been pretty strong. There's no real breakdown in this here just yet. But for the bears to be able to growl, they're going to need to have some days where the market closes near its lows. 1, 2, 3 days. Even if the market's up that day, just, hey, it needs to close near its lows, for some bearish spark to come in. And that's just absolutely not happening. Now, bullish spark. Well, yeah, the bulls are in control, but what's the upside reward potential? Well, that's where the arguments come in, right? It's one of those where, we can argue who's in control, but, when you start to look, what's more likely, right here or right here, that to me becomes a very different argument, right? And it's not one the accumulation distribution line really shows there. So that's kind of going on out there. As far as the challenge goes, I'm still looking at things in the same way. I'm still looking at them. The greater reward potential is to the downside, right? And I have taken I've taken a few stabs, there to the downside. I've been, knocked around a little bit. Took a little gain on FedEx. Took a little loss on FedEx. Twitter. But I'm not in a position to where I can just go in and buy a little longer term and wait for it to happen. But I'm also not in a position where I can't react and get some good exposure. So, for me, it's still about waiting for it to happen. And, it's one of those where, as long as you just zoom out and it doesn't look like anything's really changing, probably nothing's really changing. And that's really the case, of things here so far today. Despite some of the blips up and the blips down, here in the market. Perhaps one of the most interesting setups to me out there. The two interesting setups. One of them is Amazon, which would be tough for me to play for the challenge just with the option pricing. But, here's Amazon, and if we come in and we put the accumulation distribution line on this one, you can see with Amazon, it's been pretty flat for a while. This has not been something that's regularly closed near its highs, but it's also not breaking down, right? But, this is one where we talked about it right back here, the lower highs. Is it ready to break on down? Didn't get a breakdown. But, market went higher, and it's not like Amazon really went up much. And so, we start to break below today's lows here, as it's come off its lows here today. We start to break below those lows here tomorrow. We could see some selling action come in, be able to play this down into the 1570, 1560 area. I like it from a risk-reward standpoint, using about the 1635 level. But not enough for the challenge because of how much it would cost for me to actually go and make the trade. The other one here is Halliburton. And, this is one where we've had these kind of two volume spikes here. We had the volume spike of the failed breakout and then sold. And then yesterday, oil was down big, remember? And we saw Halliburton gap down, and it got bought up. And it got bought up on volume. If it breaks down below today's volume or yesterday's volume level, it's ready to go. Now, today it broke back above 32, wasn't able to hold that. In fact, if you look at the hourly, you can see it punched up into the 32 level. It's kind of, pulled on back off that level by about 30, 40 cents. I've looked at the options. I've looked at, possibly taking advantage of them. But I want to see this 3110 level broken first. If that 3110 level is able to break, I think we're talking about Halliburton pushing back below 30, and the options themselves have some pretty good torque to them. It's not the best, but it's not terrible there. So those are some of the things that I'm looking at. I mentioned FedEx. I would like to get back into FedEx, but so far just nothing there. Just nothing there for me to get back into. We're back up into this 132, 134 level. So I have to, be mindful and respectful of that. If it were to break down below the 7-day moving average off of this level, I might be a little more keen to, to go jump in short. But, you keep in mind, here's FedEx, and it's above the level of this candle, right? We got into FedEx short right here. Then I had this candle in the first 30 minutes. And subsequently, it's come all the way back, and it's above that candle level, right? Now, it's lagged the market overall, but, being above that candle level, is not a comfortable place to want to go and short it, here just yet. But you'll notice we're back into some of this gap level from what we saw, beginning of this month. And I do think there's going to be some resistance here in those levels. So those are some of the things that I'm looking at, that I'm watching here. As far as on the upside, I mean, there are things out there that I'm bullish on. I think go higher. Twilio is something that it had its sell day on the earnings. It erased that pretty quickly, and continuing to track on higher. If the market holds up, Twilio will keep going up. I was expecting more of a pullback on Twilio, to come to fruition, but so far it has not happened here with it. But a Microsoft just kind of keeps on keeping on here. But there's just not a great risk reward spot for a lot of these. Meaning, if there's a little pullback, do you pull it out here? Do you stop here? Do you stop out there? And I think that's the case with a lot of things, at least that are on my watch list. Here for the upside overall. If we just go out and look at number of stocks, kind of with some 3-7 crossover action associated to them. Let's see here. Pull them up. You can see that on the S&P 500, there's 16 with some bullish 3-7 crosses. And here we are, energy, but mostly smaller names, FedEx, Google, which have lagged, but nothing too major in here. With this, I got a note from my brother here today who trades oils. He trades oils a lot, and he jumped into some Chevron upside, and they have clearly been a big leader when it comes to the upside of the recent energy rally, and they are breaking into some new short-term highs. You can play this off of the 7-day moving average. There, and makes sense from a risk-reward standpoint. So those are some of the setups that are out there. I'm not sure what I'm going to do for the challenge here into the close yet. I figured after this video I'd go and do my due diligence again here with the stocks on my watch list, and go from there. But I'll make a decision here in the next 10-15 minutes here today. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.